Hey everybody, it's Jason Will. Just want to take a quick second to remind you that my Impact Agent University conference is happening this April 11th and 12th, 2019 in New Orleans, Louisiana. Get your tickets at impactagentuniversity.com and use promo code JASON10 for a 10% discount off your tickets. Ready? Ready to rock and roll? Is that action? All right. Okay.
That's right.
All right.
Absolutely. Go. Go.
Hello everybody, it's Jason Will with
Go.
So this is a real estate podcast, but we talk about leadership, personal growth, and becoming the best version of yourself. Leadership, check 1, 2, check 1, 2. Growth, best version of yourself.
Go.
So this is a real estate podcast. Joey Mure, Wealth Without Wall Street. Welcome to the Impact Agent Podcast. How you doing today?
Man, I'm doing fantastic. Thanks for having me on.
So this is your second time on the show. So let's recap everybody on what is Wealth Without Wall Street. And in this description, let's go ahead and tackle the 5 pillars, if you would.
Yes. Okay, so number one, I think Wealth Without Wall Street exists to give people alternative ways that they can create passive income and get out of the rat race. I think the biggest problem that we face, whether we're 1099 contractor, whether we're a real estate agent, whether we're a business owner or an employee, is we're constantly trading time for money, right? Actively, you have to go and produce a good or service or whatever it might be to get income. And there's no real way out of that. There's no freedom in that situation. You have to start replacing that with passive income, just like Robert Kiyosaki talks about. Passive income must be greater than your monthly expenses or you're stuck. So anyway, so that's the purpose of Wealth Without Wall Street, obviously. The 5 pillars, as you mentioned, keep people, the next question they always say is, well, how do you build wealth without Wall Street? We really break that down into 5 categories. The first one is cash flow. And that's really something I'm passionate about today, to be able to talk about tax strategies that we implement for our clients. So cash flow is just simply the money that is going out the door unnecessarily or unexpectedly that I can get coming back towards me. If I'm paying debts in a certain way and I can be more strategic with how I pay those debts off, it increases my cash flow. That's a win. That's going to get me closer to that financial independence that we're talking about. But the bigger part of that is, and this is where our niche comes in, is in the tax strategy side. If I don't have to pay something to Uncle Sam, that's money that I can now turn into wealth or create passive income with. And as we'll talk about today, I mean, there's some pretty dramatic results that we've been able to see to the tune of $50,000 to $100,000 to $250,000 a year in tax savings. Well, imagine what kind of passive income you could create with that. So,
wow.
So that's the first pillar. We use life insurance as a second pillar. That's a savings. I mean, you know all about this from how we've built your plan. It's a savings replacement. It's not necessarily just a protection vehicle. It's a way that we can create our own banking system and use that to fund all these passive income assets. So life insurance is a huge part of what we do. The third thing would be your own business. Now, Wealth Without Wall Street doesn't create your business. You create your business. But what we do is we try to equip you with ways to improve that business, to make it more passive. We actually have a podcast coming up in the next 2 weeks where we interview a specialist who is actually helping us right now to create our business to be more passive. And so anyways, any way you can do that, that's your biggest investment outside of, I mean, nothing in Wall Street can compare to your own business. The 4th and 5th pillars are real estate and lending. So whether that means you want to get into apartment investments, whether you want to get into flipping land, note investing. We just had a great show with a note investor who buys underperforming notes. Or if in the lending side, if you want to do more family banking, keeping money within the family and creating excess passive income that way, those are our 5 pillars.
Just a shout out to my audience about your podcast. I repurpose your podcast just about every week in my newsletter just because the content is so good.
Man, thank you so much for doing that. We feel like it's resonating with people because it's growing every week. We're getting more and more comments and more feedback. So keep it coming. If you want to hear something, we'd love to tackle it.
Now, before we move on, I just wanted to pump the brakes a little bit and talk about this passive income. What the mindset, I think, especially with 1099 salespeople, they should have around passive income. The goal that a lot of people like yourself, these experts in passive income, isn't the goal that you want for your clients to be thinking about any extra money that they can create, whether it's tax savings or any extra that they can maybe shave off of their monthly expenses. The goal is to try to create passive income with that money, not just spend it.
Absolutely. And that's totally against human nature, isn't it? Right?
Yeah.
Especially as you're building a business and you're starting to become more and more profitable. There's actually something in a book that I recommend all the time, Becoming Your Own Banker. There's a thought process called the Parkinson's Law. The Parkinson's Law tells you that your expenses will rise to equal income.
Yeah.
It's just a natural thing. You have to kind of put the governor on that so that you don't, but it's for what purpose? It's for the other side of that is either I can spend that money today on these things that really aren't going to create more freedom for me, or I can use that money to create freedom on the other side. Now, there's definitely a balance, and we're all about making sure that you have experiences that you're enjoying today with your kids at the ages that they're at. So, I don't want to sound like I'm speaking out of both sides of my mouth there, but there's a balance, and we want to try to help people, with that.
Well, and just one more quick point. The second point I wanted to make about this, and this might be a little harsh, might hit some of these folks in between the eyes, but really, if your business, the success or failure rests on your health, your ability to get out of bed and work, like if you have an accident or you get sick, ill, and God forbid it's a serious illness, if your business just stops, then you don't have a business.
Absolutely.
And I think a lot of these people that I'm hoping will be watching and listening to this, they just don't think that way. And I want to make a distinction. If their business, either rises and falls on what they do on a daily basis, then they're a salesperson. They're not a business owner. And this is their opportunity, especially for real estate folks, to build a team, build a business, reinvest their profits into passive income, because someday either they're going to get tired of that rat race and want to invest more time back in their family, they're going to get burnout, or something's going to happen to where they're going to need this financial freedom that you're talking about.
I want to make the point to go along with that is that Robert Kiyosaki talks about the cash flow quadrant, right? There's the employee, then there's the self-employed, then there's the business owner, and then the investor. What most people think when they turn into a self-employed person is that they're a business owner. But to your point, they just created another job. They own their job. And so we are really about, okay, how can we invest in your business through things like, use the E-Myth, for example. The E-Myth book is about creating a way that you're replacing yourself in each of these roles that are required for your business to grow, so that it's not dependent on you in each one of those roles. So I'm going to give a shout out to you in your coaching program, right? If there's somebody that is in the real estate world, we just hired a coach to help us build a passive business. You can't do it in and of yourself. You have to have a coach, but the returns on that are ridiculous. If people are willing to pay a little bit today to have that outside person tell them, okay, this is what you should be doing. This is the first person you should hire to, get an assistant. Maybe it's a listing coordinator. I'm just thinking about a real estate team. Well, then it's a buyer's agent. Well, then it's a listing coordinator. Then it's so on and so forth. And you've lived it and you've done it. You're the best coach for somebody to hire and say, okay, I want to take my business to be a passive business. Otherwise, they are going to get stuck in owning their job. So we believe wholeheartedly in coaching and investing. Your business returns will be staggering compared to anything else. Whether, people want to invest in real estate, that's great. 10, 12, 15% for real estate returns. Investing in your business, thousands of percent return. You can't even compare. And it's something that you're doing day in and day out. You know the most about, you have the most control. So anyways, I don't know if that resonates, but I definitely want to make a shout out there.
Yeah. I mean, the last thing I would say, we've got a very successful real estate agent in my market who does not believe in teams. I have tried a little bit to break through to him. He's very hard-headed. In my opinion, he's a great salesperson. He's not a great business owner, and therefore he doesn't have a lot of credibility, in my opinion, because there will come a day where this thing is going to catch up to him and it's going to be bad. But you consider yourself, you approach your clients from the position of a coach, do you not?
Absolutely. Yeah. We think of one of the differentiators for us is, okay, I've had a financial advisor before. Like just say somebody says, I've had a financial advisor. How do you compare? We're the coach. You're the quarterback. If you're looking for someone to babysit your money, we're not the guy. We're not the people. We're not going to do it for you. We're not money babysitters. We're not people that will just manage money on your behalf where you take all the risk and then you hope that it works out. Mm-hmm. This is a participatory sport that you're going into, and you're looking to us for knowledge and you're looking to us for direction and guidance. But ultimately you own it, you control it, and you are the one that's responsible for making it happen. But we're going to equip you along the way as a coach.
All right, so we're getting into tax season. So coach my audience through some strategies where they can be smarter and more strategic around this time of year to save some dollars.
Yeah, I mean, who wants to write an unnecessary large check April 15th?
Yeah, nobody.
Not a whole lot of hands going up in the room. First of all, let's say disclaimer. As a coach, I know I'm not the expert in everything, but I'm always going to connect you with the expert. Mm-hmm. So we have a tax consultants group that we work with, and these guys are actual tax attorneys and accountants that they're the ones that are the absolute knowledgeable. So what I'm going to share with you more experiential things from clients that they've experienced, things that I've put into place, and things that I've learned along the way that I want to share. But ultimately, you want to make sure and go to a tax advisor ultimately before you start implementing these things. So there's my standard disclaimer, if you will. Number one, I think the biggest question I always ask people is, do you know somebody who is more successful than you financially, whatever it might be, that pays less in taxes? And I think that's a common thing you've heard, right? I mean, the Warren Buffetts of the world, the Donald Trumps of the world. I mean, it's a known fact that there are guys that know something about taxes that you and I don't, right? They have figured out a way to reduce their tax liability, and we just honestly feel like we don't. So a couple things I would say. Number one, there's a progression to this. If you're paying over $100,000 in taxes, you absolutely need to use tax planning as a strategy. And what I mean by that, I'm not talking about tax reporting. What accountants typically report your earnings and things, and they kind of plug in the numbers and spits it out, says, hey, this is how much you owe. They're not strategists. Tax accountants typically look in the rearview mirror. Tax strategists or planners will look forward, and they'll say, what is possible in the current tax plan that we can then use to our benefit? Anyways, I want to make that discrepancy. Let's start with the person that is like just getting started. Maybe they've started to make some good money. They're a real estate agent. I'm just going to use that as an example. Mm-hmm. And let's say they're making $100,000. You're like, they've been operating as a sole proprietor. So there's entity structure that is important in tax planning. As a sole proprietor, there's one small thing that I want to make that has a big impact. If you could just switch to an S Corp, that's an LLC operating as an S Corp, you can now, there's a 3.8% Medicare surcharge that you pay on all of your income as a sole proprietor. So let's just use the example, $100,000, and they start paying that 3.8%, that's $3,800 they're having to pay on all that income. As an S Corp, you're actually an employee of the business, and you can claim a small salary out of that $100,000. Maybe it's $20,000 or $30,000. You only pay the Medicare surcharge on the salary portion. You don't pay it on the rest. You take the rest as a distribution. So that right there, immediately, you're able to save 3.8% on, let's say, up to $70,000 of your income. That's a pretty big deal. At $100,000 income, that's a pretty big deal. So that right there puts you in position to take advantage of that. The second thing it does is there's something called the dwelling unit rental clause. It's under the IRS code section 280 AG. All right, so I want you to look this stuff up. Don't just take my word for it. This was around the time of Dwight Eisenhower, and he had some buddies in Augusta. I actually head to Augusta next week before I come to your conference. And he said, these guys came to him and said, hey, listen, we don't want to have to pay tax on the money we're getting when we rent our house out for the masters. Okay, so they do it for a week. So he started with a week, and he said, okay, yeah, you don't have to pay. If someone rents your primary residence from you for up to 7 days in a year, you don't have to claim it as income. Wow, okay, that's pretty cool. Well, they expanded it later on to 14 days. So as I'm going to bring this all around, as a business owner, in this case, an S Corp owner, you can rent your house up to 14 days a year tax-free. Okay. So practically, how does that look? As a realtor, let's say that you have a small team and you have a sales meeting every week. Well, there's 52 weeks out of the year. If you did 14 of those meetings at your house, you get to rent your house from you personally. Your business will rent it from you personally for 14 days. You have to, of course, you have to get an appraisal done on your house that is a daily use rental. Okay. So you compare it to, like, what if you went to the Grand down by your house and you said, hey, I want to rent, however many square feet is your house, 3,000 square feet, whatever it is. I take 3,000 square feet and I go to the Grand and say, I want to rent that from you for the day. How much would you charge me? Well, that's the comparison of what your house would be worth if your business rented it. So just a roundabout number, don't hold me to these numbers exactly, but let's say it's 50 cents to 60 cents per square foot. That's $1,500 at 50 cents on a 3,000 square foot home. $1,500 per day, and you can do it 14 days a year. So now you've just legitimately, by law, IRS code to back it up 100%, you've just moved, what's 14 times $1,500 from your business that would have been taxed to you personally that's now no longer taxed. And you're able to do that because you're operating as an S Corp.
$21,000.
Yeah. Are you okay if you don't have to pay tax on $21,000 of your income? I'm okay with that. That's pretty cool.
That's huge. That's huge.
So, that's how we're able to really create more passive income with money that was already going to flow under your nose anyway, right? You're already going to pay it. So how do we then redirect that to benefit you and create more passive income? So those are a couple of examples. I don't want to keep beating people to death with all the specifics, but you want me to share some more?
That one was really good. Do you have one more? Do you have one more you can share? Because I want, you won't want to give because I want people to call you, obviously, to get the rest. But if you got one more, I have never heard that before. We have had tax strategists come and host lunch and learns at my office multiple times. So we've heard the S Corp tip till we're blue in the face. I have never heard of the IRS code 280 AG before. So that's huge. You got one more you can share?
Yeah. So what I'll say is this: if you have college age kids, there's some use of a C Corp, which we're not going to get into necessarily today. But if you get into that situation where you're paying $75,000, $100,000 or more in taxes, we definitely have some alternate things, particularly if you're in real estate, okay? Because all you do is marketing. Well, the C Corp could act as your marketing arm of your business, and there's all sorts of benefits. I'm talking like if you have college-age kids, you can get reimbursed for that. If you're getting disability premiums, you can get reimbursed for that. There's meals for the convenience of the employer. There's a number of things. I'm not going to, again, go into detail. But one thing that you can do either between your S Corp or a C Corp, if you got to that point, is you have something called de minimis meal plan. That's just a big word to say overtime. All right. So think about like if you ever worked for a big corporation and you went on a trip with the business and they said, oh, by the way, you get a $75 a day stipend or whatever. And you could choose to do with it what you want. You could either use it for meals or you could save it. And I've heard people save it. Some people spend some of it, whatever. As an S Corp and as a C Corp, you actually can, your business can pay you, generally speaking, up to 100 days a year where you're working overtime or on odd hours or weekends, which as a realtor, do you work any odd hours or weekends?
Yes.
Just a couple, right?
Yeah,
just every
a
once
few.
in a while. You really never stop working. So this, I mean, the fact that they limit it to 100 days is probably too little. But you can get up to $75 a day from your business to you personally up to 100 days a year. So $7,500 for you. And if you, and in the C Corp, you actually could have your spouse be a part of that. So another 75 days for your spouse, or excuse me, 100 days for your spouse. This becomes a pretty big deal because you don't have to claim that as income personally either. So these things just all add up to where we can, I mean, again, we can get way more complex than this, but just to give people a good start, this is definitely some things that you should be taking advantage of.
Yeah, I feel like, so many people are going to be watching this and they're going to be having this inner dialogue with themselves, and they're going to run into a lot of, erroneous objections. Like they can't afford, this tax planning, team of yours. And, the little bit that you're helping them save is not going to allow them to buy a rental property, or at least for some time. So it's just like, well, $3,800 and whatever else, it's not going to add up to much I can do anything with. What would you say to that, to somebody that's just got a very, it can never happen to me mindset?
Number one, it will never happen if you don't take action. It's just like anything else. But the second thing would be is that if some of these things right here, I'm telling you, you don't need a tax planner to do. You could do them yourself. If you need to get into more detail and more depth, like the very complex things, like we had a client, this is kind of a shocker to me as I realized that he's in commercial real estate, and he was paying $230,000 a year in taxes, something like that. And after really hiring, right, like you said, hiring a professional, a tax planner, a one-time fee, he was able to save $160,000 of that $230,000 in the very first year. Now, you may say, well, how much did they charge him? Yeah, I can assure you it was not anywhere near that. It was about $30,000 or something out of the $160,000 he saved. So my thought would be, if you can find something that gives you a much bigger return than that, then you should do it. Otherwise, you're going to pay retail for it by continuing to pay extra to the government unnecessarily, or you can hire a professional to make sure that you're not missing out on that. Every little bit that you're able to put aside is putting you light years ahead of your competitors, of your peers. I'm not going to make that decision for you, but ultimately you should see that this is money that you're leaving on the table that you could be taking advantage of.
Well, I think it's just such small thinking, because they could, flip the script and go, all right, well, let's just say I implement this plan to save $3,800. $3,800 to an agent that's making $100,000, if they reinvested that into their marketing, let's just say, into their systems, maybe it's a new hire, it's leverage, it's technology, whatever it is, it's leads, can help them get to that stature where they are paying out a huge tax bill. So then you can help them save, 40%, whatever it is, off that taxes. What can they do with that money? You have avenues, outlets for that money that will generate passive income. Because the other thing is, right, if I'm busy, I'm a busy salesperson.
Yeah.
I don't know. I may not be like Joey. I want to invest in real estate. I just don't have the time to find the deals.
We absolutely could help you connect with people. Again, we're not the people that actually do real estate. We don't have turnkey rental properties in our back pocket, But we have some of the greatest turnkey companies that we partner with that you can go, they find the house, they renovate it, they put a renter in it, and then they sell it to you, and you get $300 or $400 a month passive income. That right there is just no-brainer stuff. Like you can turn that on and turn it off as easily as possible. But I'm going to back up 1 second and say this. I think one of the biggest objections for people that are at that kind of critical point where they're starting to make some money and they need to go to the next level is coaching. Again, I can't maximize this enough in people's minds. So you tell me, Jason, someone wants to hire a coach. What's an annual number that's it's going to take to get a consistent coach to help them grow their business?
Well, gosh, I mean, you'll find the rates vary across the board. But if you want to find a really good one, then I think you need to look at investing about $12,000 a year.
Okay, that's a fair number, $1,000 a month, right? Mm-hmm. If someone's going to invest $12,000 a year in their business by having a full-time coach like this, what is a realistic increase in their business that they should expect?
All right, so a couple things, just a couple ground framework things that I would, kind of want to set this up. You got to do, like the coach, like you said, put my real estate coach hat on. I can't do the work for you. So you have to be coachable. You have to do the work. And the thing about the money is, I've heard somebody say this recently, and I thought it was brilliant. The more you pay, the more you pay attention.
Yeah.
So, there's an accountability factor. If you're doing those things, if you are holding yourself accountable, you're doing your coaching homework, you're doing everything they tell you to do, then you're looking at doubling your business year over year. That's entirely 100% possible.
Okay. And I think you're being conservative, honestly. So if I just found $3,800 that I was going to pay anyway, I've just now paid for, what is that, a third of the year of my coaching for free. Just by doing one thing, just by switching my entity and how I report to the IRS, how my earnings are created. I just paid for a third of the year. Your first quarter of coaching is paid for. Now, if I was making $100,000 and now I'm making $200,000, was that a good investment? I mean, that's Absolutely. The best investment possible. I have no dog in the fight there. I don't provide coaching for real estate agents, but I'm passionate about seeing real estate agents increase their business so that they can get to a point where it becomes passive down the road. And I mean, I love books like The Millionaire Real Estate Agent. I know you're a big fan of that model. Just seeing how you've built your business and how you've made it passive. This is the number one place realtors should be investing in. And there's all these like shiny objects everywhere else. Oh man, what if I did this apartment deal? Or what if I did this other thing over here, or whatever it might be? And I'm chasing these other things. And right under your nose, you could have an amazing passive income business, and you just have to know to focus on it.
That's awesome. I love, circling the wagon on this. It happens a lot during these calls. We circle back to coaching because, I ask people, do they believe in it? Do they have one? What has it done for their business? I've never had somebody who is coachable, who has a growth mindset, who said it was the biggest waste of money ever. Now, you may not find the right coach the first time around. You just keep going. And eventually you'll find somebody that clicks. But more often than not, I've had folks that I've interviewed when I was looking to hire a coach, a decade ago, and say, listen, what kind of results do you have? And it's funny. They'd say, well, you know what? The first 3 years I didn't have any results. And it's not because the coach was bad. It's because I wasn't doing what he or she told me to do.
Just not engaged.
Yeah. That third year, I actually started listening to what they were saying and started implementing the strategies and the tips, and it started working. All right, so let's talk about Impact Agent Conference real quick. You're one of our sponsors, and you've been a huge supporter of the event, so thank you so very much. I want to let people know that you're going to be in New Orleans. What time do you have your travel arrangements already set?
Yes. Unfortunately, I'm going to be in very late Wednesday night. I'm flying in from the Masters. So, I had to try to make it work. I want to get the par 3 tournament in. Anyways, I'm going to be like almost midnight Wednesday, but I'm going to be bright-eyed and bushy-tailed Thursday morning, ready to learn and ready to share with this group. I think we're on for the cocktail reception Thursday night.
Yep.
and the influencer panel, right? I mean, how much more exciting can you get than being an influencer? That's what we all want to be. So
Right.
of course we want to show up to that. So yeah, I'm really excited.
Well, people want to go ahead and be proactive and reach out to you, schedule a coffee appointment, or even just learn more about Wealth Without Wall Street before Impact rolls around next week. How do you want them to get in touch with you?
Couple things. Number one, if you have questions about the tax stuff I was talking about, we have a specific webinar you can just download. It's freetaxwebinar.wealthwithoutwallstreet.com. We made it the longest URL possible just because I don't know what we just like. Yeah, freetaxwebinar.wealthwithoutwallstreet.com. If you want that, if you want to know more about passive income and what we do to help realtors in particular build passive income, we also have passiveincome.wealthwithoutwallstreet.com. You can download 4 very short videos on that. But if you just want to reach out to me while we're in New Orleans, I'd love to connect. Just email me, joey@wealthwithoutwallstreet.com, and I would be thrilled. So let's do it.
Well, I know, like, you even bought tickets and gave tickets away for free. Those agents that are receiving these tickets, I mean, their lives and their businesses are going to be changed. So again, thank you so much. I think those agents probably they don't know the magnitude of what's about to happen, but they're about to find out.
It is pretty fun to think. I almost feel like we're looking at a tidal wave that is about to just blow some people's minds with the lineup you put together, the environment that's going to be going on. So yeah, I believe wholeheartedly in coaching and events, and so that's why I want to put my money where my mouth was. So thanks for having me on today, Jason.
Awesome. Appreciate it, Joey. I'll see you next week.
Thanks for listening to the Impact Agent Podcast. If you liked the show and got something out of it, please like the Impact Agent Podcast on Facebook and rate and review the show on iTunes or anywhere you listen to podcasts. This really helps us grow the show and helps other agents find it. Please share it with your friends and coworkers as well. Want us to deliver the show to you via email every week? Then email me at jason@impactagentuniversity.com and we'll send you the show every week. Please let us know what you think about the show, what you like, what you don't. We'll possibly make a suggestion about a topic you want to hear. Email me at jason@impactagentuniversity.com or leave us a message on Facebook at Impact Agent Podcast. Until next week, everybody be productive, safe, and happy, and always keep learning. This podcast is produced by Johnny Gwynn at Deep Fried Studios in Mobile, Alabama, and is paid for and powered by ImpactAgentUniversity.com.